Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, March 1st, 2023. Before I click on the charts like this one and that one, I just want to encourage you to check out today, Wednesday, March 1st. We're offering on YouTube for free and no obligation our daily SPY and daily Triple Q reports. This is not going to happen very often. This is the first time we've done it, but because today, March 1st, is the 1-year anniversary of offering both of those products in our subscription package on wickedstocks.com. It's pretty much where it all began in terms of our analysis that includes the SPY report and the Q report and the stock picks and the indexes on a weekly basis, so forth and so on. So check out the Triple Q, check out the SPY. They're for free. They're for Wednesdays, March 1st. Get a sense of those markets. If you're interested in subscribing, please do so. Check out wickedstocks.com. And let's jump to Wednesday's Tesla. Just a reminder, I like to start big picture and work my way in. And in early January, we came off of this targeted, meaningful channel support, presently between 77.66 and 89.37. We have a 2 to 3 month objective now underway at 246.92, following the settlement about 5-6 weeks ago above this intermediate channel structure, presently in the 150s. So when we closed above the 150s channel structure about 5 weeks ago, following a positive earnings report, we then shifted into a 2 to 3 month target at 246.92, and that remains in effect. So let's jump to sort of the let's call it the I don't know, we'll call it the 2 to 3 week time frame. This is it here, actually. 195.64. We came off of this channel bottom last week twice. Above 195.64, the 221.25 longer-term 3/8 Fibonacci remains in reach, and that is actually shown here on the daily chart. We rallied pretty close to it, not within 1%, but I think 1.5% of 221.25 about 2 weeks ago. And 221.25 is a 3/8 upside Fibonacci on the all-time high from November of 21 against the more recent January low. And so there's that. Let me jump back to this. 195.64 is our base of support, not only for the week, but even into later March, because holding above 195.64, the bullish momentum that remains intact above that 150s support, that 150s buy signal that occurred 5 weeks ago. So holding above the 195.64 area maintains a constructive dynamic into later March. Now, these are day trade levels that I'll get to in a moment, but I just want to emphasize that the 1 to 2 week time frame expects 221.25, and the 3 to 5 week time frame expects 248.04. Better shown here. So this is 1 to 2 weeks by the end of next week, 221.25, and over the next 3 to 5 weeks by the end of March, 247.44, which is that same channel top, but on the daily chart. And of course, we would have a meaningful sell signal into later March if we close today below 195.64. But first, let's take a look at the downside today. You can see I got pretty light levels scattered about. 199.22 stands out. Short-term channel bottom over the last 5 days can contain intraday selling pressures, and above which 277.25 or 277.77 rather is in reach. Now this is not contained buying pressures, but the high settlement price from Monday just below that area. We certainly opened above it on Tuesday, fell back below it, but it's still a decent intraday pivot point. In other words, holding below 207.77 will keep the 199.22 channel bottom in reach today. So there you have it. This is sort of the day trade. 199.22 support and 207.77 resistance. Now, because of the overall bullish nature on a number of time frames, but most notably the next week or two above 195.64 and into later March above 195.64, know that pushing back above 207.77 is not going to be difficult for this market to do. And if so, not only expecting a retest of yesterday's 211.23 high, but really 214. I've got 214.66. And I've got an inconsistency here. It is 214.66. So this level here, I don't know why it says 214.24. I can't remember why exactly. But 214.66 is the number. So we will probably correct this by the time you download this if you like, but it is 214.66 that if we push through 207.77, 214.66 in reach, where we can place a daily high. And if we settle today above 214.66, we should tomorrow test that 221 and a quarter level, which it's not really shown here anywhere, but that channel top that you see coming across is at 222.84, and that is a zone of resistance that is in reach once again over the next week or so above 195.64. So holding above 195.64, if you're a swing trader or even a 3 to 5 week position trader, it's go long or be long above 195.64, at or above 195.64. The 220s able to contain buying possibly on a weekly basis. We could fall off again from here. And if we close above 222.84, we're just another week or two away from reaching that 2 to 3 month target well above the market on the daily chart at 247.44, where we could top out through Q2, fall off into later year perhaps, and if settled above, would mark a significant turning point longer term for Tesla to the upside. Let's talk downside again. If we happen to break 199.22, 195.64 is likely, where once again we can bottom out through March, and above which we remain bullish through March into the 240s. But if we close today below 195.64, we shift negative. The 2 to 3 week time frame shifts negative to 153.40. 153.40. A lot going on in the 150s. Is, if you recall, early in this audio, I mentioned how the 150s, this long-term channel structure, is now converging with that rising speed line at 153.40. So if we close below 159.64 and you're long the market, or you bought 220 out of the money calls in anticipation of 221 and a quarter, or you bought 245 out of the money calls in anticipation of 248.04, well, those you might consider holding, but I would liquidate them because I think you're going to get a better price for them back in the 150s. And why I say you might consider holding them, because holding above the 150s, I'm still anticipating the 240s. You know, as best shown on this chart here. Holding above the 150s, we could fall back into the 150s perhaps over the next few weeks, indicated with a settlement today below 195.64, and the 150s able to absorb selling through March, through April, and we can turn back up again from here and eventually test this 246.92 channel top within several months of retesting the 150s. But I'm not anticipating that downside once again unless we close today below 195.64. I know I am very repetitious, and that is really for good reason, because I know these concepts, if you say them once only, and this video was just a minute and a half long, it just doesn't sink in, because I know from the recipient's perspective that the redundancy is important. So I'm not going to be any more redundant than I already have. Check out the Daily Triple Q and the Daily Spy Report. They are free today on YouTube, and I wouldn't expect to see them again for another year anyway. And so there you have that. Check out those videos. I'll be back tomorrow, of course, with Thursday's Tesla, and you have a great day.